Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MAIDSAFE. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 4th of May, 2018. Today I'm joined by my co-host Mike, so let's begin. Welcome, Mike. Thanks for joining the show today.
Hey, how's it going?
Yeah, not too bad. It's been a good couple of weeks. We took the week off last Friday, so we've had some good progress since then. A lot of green in the markets, and the market cap is up in a major way.
Definitely.
So.
Yep.
Let's get straight into it here. Let's have a look at the global chart. Pull up the 7-day view here.
It's been staying up above 400. Looks like it's gone down near it into the 405, 410 range.
Yeah, I wish there was a 2-week view here so we could see.
Yeah, you just go in and change the date from 426 to 419, stretching out to 2 weeks. Goes to 417 on mine, where it started at 324 2 weeks ago.
Yep.
And now it's at 452.
That's a really nice increase for 2 weeks. That's
yeah.
That's a bit. That's fast, really.
Well, it's gone up to, it had a pretty good consistent run up to about 430. Had a couple of tests of the bottom in the past week, or tests of downward pressure, and it stopped before it hit 400 both times. So I think it's pretty well confirmed that the 400 might be a new level of support, looking as a chart master. But yeah, as far as for that, it's definitely a cool option. So
I think last time we talked about our last show, we mentioned that the tax time was over in the U.S., and so it could be that some money was coming in now from refunds and just general investment. People often save up before tax time in case they've got to pay. So now that that's over, I think it's a new cycle. So I think we could be in a pretty bullish period in the next 6 months.
It would be nice to see it do like it did last year. Last year at this point, it was, the summer was when it was doing its run up. From May to September, it did a pretty good run from 40 billion up to 168. So it quadrupled from, this time in May, beginning of May, to the middle of September. It quadrupled in that chunk of time, and then it did the major run up from, November to January and whatnot.
I think it's important for people to be cautious, though, because what I see, I'm seeing a lot of positive news from banks and different groups. There's been good news from Goldman Sachs saying they're going to start doing more stuff in the blockchain space. There's been I think one of the international banking groups was saying they don't see any problems with it, and these kind of good news sort of things tend to play into the enthusiasm, and the people who are some of these top investors, they use that to their advantage. I believe they'll go in and they'll play things up and they'll hype things up in particular periods of time that they know people have more capital, like around the end of tax time, and then they'll come in, and because they've already bought in, and they get the run up, and then they sell later on, and they take big profits. And I think I'm seeing a lot of enthusiasm now. I'm seeing a lot of run up. So I'm not saying don't invest. I'm just saying be cautious about what you invest in. Make sure it's something that's got good stability, good long-term prospects, because this sort of game is played by the master class investor who they've got a lot of capital behind them, and they really play off the small investor and rip them off. Really, that's what I believe anyway.
Yeah. Well, we'll have to see how it goes. I think it's pretty interesting time for crypto. I think this year is going to be definitely a very interesting year, all things considered, based on what happened last year. It brought a lot of people, where their attention was brought to the cryptoverse, and a lot of people are keeping an eye on it to see what it's doing, and it could have a dramatic year this year, just like it did last year. I think the stage is set.
It could.
So as far as for that, let's see what's happening.
Let's move on to Blocktivity. See what's happening this week.
Pretty much the same. Ethereum's down at 3. Ethereum's down at 3rd now instead of 2nd.
Yeah, it's dropped.
It's still
redlined.
Big
uptick for BitShares there. BitShares had dropped down. Now it's back up again.
Yep. Ethereum is still pegged. 28,000 unconfirmed.
That's a lot.
Yeah. Yeah, it's not as bad as it was for Bitcoin back before their modifications, but they're still half, 50%, which I would think if they were having all the transactions from the Lightning Network going and doing what it's supposed to do, I would think that it would be lower than where it's at. I thought that the Lightning Network would make more of a difference, but I guess it hasn't.
The Lightning Network is still pretty small potatoes. I think it's still mostly segregated witness that's having the main impact at the moment. But in time, I guess Lightning Network could be a bigger factor. Being that they're at 50%, I think they've got a fair bit of spare capacity now, so they'll probably be all right for quite a while. I can't really see that changing. And with so many other options now as well on the table, including Bitcoin Cash, which has huge capacity remaining, I just don't think there's a big worry there. Ethereum is really the big problem, of course. Mm-hmm. We're going to be mentioning Ethereum today. They've got a solution that is in the wings apparently. So let's get on into the news then.
Yeah, let's do that Ethereum news first. Go and reorganize a little bit.
All right. Let's see if I can.
Since we talked about it just a second ago.
It's the second one there. So yes, Vitalik Buterin, sharding scaling improvement is coming to Ethereum network. It's got a little picture of him adding looks like he's doing some voodoo there in a pot.
Wizardry.
Crypto
wizardry. Yes.
Crypto high wizardry.
Yes.
Ethereum could soon see its transaction processing capacity increase dramatically through the use of so-called sharding. Co-founder Vitalik Buterin hinted on Twitter on April 30th. In a Reddit post and a series of tweets following yesterday's, Buterin delivered a proof of concept for the technology and suggested the, quote, bag of ideas, end quote, for its implementation on Ethereum was, quote, pretty well established, end quote. Sharding is a method of increasing the number of transactions a blockchain can process, designed to be used on-chain. Multiple network computers divide the transaction workload between them, allowing significantly more to occur within the same period of time. The time taken to process shard blocks, those split up between groups of computers, would be around 10 seconds, Buterin suggests. In a series of tweets starting yesterday, Buterin wrote, quote, I would not say the spec is finalized at this point, though the bag of ideas is, IMO, pretty well established. The latest research consists of combining together existing ideas about scaling and latency, i.e. block time latency reduction, end quote. He added in a following tweet that, quote, the overriding principle is to get maximally close to equivalent properties to a single chain, end quote. Ethereum developers have sought ways of providing on-chain scaling improvements for some time, these facilitating competitiveness with fiat payment processors such as Visa. Well, we've been waiting for sharding for a long time. It had always been kind of 2 years away up until this. So it seems like, having some. It seems like the progress is they're starting to really focus on it now. So it could happen, in the coming 6 months. I'm skeptical, but it could.
Yeah, I'd like to see the transaction times on at least some crypto networks and stuff get to the point to where they actually are faster than a Visa processing transaction speed. So basically you'd have from beginning to end of the transaction, you're talking less than 3 or 4 seconds. And a lot of them of the next generation of Ethereum style, blockchains, they're able to go and do those much quicker than the Visa network. And I think that's actually a good sign, especially for
Nano
coins.
is one that's able to do that with their system, which is considered, it's still pretty considered experimental.
Yeah.
And they've had some problems, with the exchange. We're going to be talking about that again today too, unfortunately. But yep. All right, well, let's get on with the next story here. Bitcoin network hash rate at all-time high, even among, pardon me, market corrections. The Bitcoin network's hash rate is continuing to climb today, May 2nd, according to data from BitInfo. Pardon me. Oh, I'm having a horrible time here with cough. Continuing to climb today, May 2nd, according to data from Bitcoin or BitInfo charts. The continuous growth of the hash rate over the past month signals a constantly increasing level of interest from the miners, in spite of Bitcoin's inability to break the $10,000 price point after the market crash in February. After Bitcoin's price reached $20,000 in December of last year, the market began to fall in the wake of the new year, with Bitcoin dipping below $6,000 in February, although the market has recovered slightly, with Bitcoin currently trading around $9,144, up 3% over a 24-hour period. The price is still at more than 50% below its all-time high. Blah, 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 blah. I shouldn't have even bothered reading that. The rising hash rate last recorded on May 1st as 31,590 petahashes per second. Well, that just blew me away. I haven't been tracking the hash rate of Bitcoin in probably over a year. So it's just amazing to me.
I remember back when I was actually running my ASIC miner that I got for Bitcoin. I watched as my little 400 gigahashes went from something that I could actually get Bitcoins from my mining efforts. And this was back in 2014. I managed to go and get mine at the end of January of 2014. And I remember watching the total network volume go over a petahash. And I was like, this sucks. I'm going to get bit dust. And I, that little ASIC miner and stuff, it's so forlorn now. It goes and says, I can't do nothing. And it's all sad. It's all sad. It's all sad because it can't even keep up with it can't even mine enough to pay for the electricity.
That's right.
So, I mean,
I gotta be in a place where the electricity is so cheap that it's just.
You have to basically, maybe if it was solar powered, then it would be okay.
I don't know.
I would still have to get enough to pay for my internet connection.
Yeah.
So, as far as for the thing, I would, my personal experience leads me to believe that it's much better to buy the coins and ride the fluctuations than it is to pay for the mining equipment, because it becomes obsolete so fast in my mind, as far as for what you get compared to what the money you put in for it and stuff was. And I don't know.
Well, it's interesting. I find that there seems to be some correlation between the Bitcoin hash rate and the future price of Bitcoin. And that's because the miners are paying so much to mine that they tend to not sell unless they can sell at a decent profit. And because they are providing a fairly substantial inflow of new Bitcoin into the system, and they will be for a few more years yet, they have a pretty strong influence on the price. So and that's what I think is true anyway. So I suggest what I'm suggesting is that this rising hash rate is a sign that the price of Bitcoin is going to keep pushing quite a bit higher over the coming year.
More difficult it is to mine, the more expensive the miners are going to go and sit out for and stuff.
That's right.
So, for me, I've lost my enthusiasm for proof of work. I am solidly in the proof of stake camp, or the proof of resource. I think those are both
Yep.
Those are both better by
That's
far. And I just look at
that's
how
MaidSafe
much
safe network proof of resource.
yeah. And the thing that I go and look at is how much electricity is used for this. And it's just anymore, I kind of wonder if it's truly necessary, with
Yeah.
proof of stake and, with proof of stake being something that could go and reduce the amount of wheel spinning, spinning your wheels in the mud to go and get maybe something, I just don't see it anymore. The logic behind it, I really don't.
Yeah, I don't either. It was an interesting experiment, and I think
Yeah,
it's demonstrated its weaknesses and its strengths.
yeah,
And I believe, like you believe, that the weaknesses outweigh those strengths when we have alternatives now that are better, much lower cost, and much more equal in distribution,
yeah.
because this proof of stake is anybody can have a stake pretty much in most of
Hmm.
these proof of stake coins. All right, let's get on to our next story. Payments company Square unveils low returns from Bitcoin business last quarter. Now, I think that's a really uh, horrible title. I disagree with it completely. I'll get into that in a minute. We're covering this mostly because we've been following Square's uptake of Bitcoin and cryptocurrency into their payment system. Square is a payment service provider that you can get. You go to purchase something at a shop, they'll have a little point of sale terminal, and Square sells basically point of sale terminals. I use one myself in my company. When we go to the market, people can pay with their Visa, MasterCard, and Square then deposits that money into our bank account. Well, Square now accepts cryptocurrency, and so I've been following stories along, how they've been going with that, because it's quite interesting to see how this sort of thing develops. Anyway, let's just get into the article and why I disagree with the title so strongly. U.S. payments processing company Square recently reported low profits from Bitcoin trading in its Cash App last quarter, according to an article by Fortune Wednesday, May 2nd. Now, they say, just in that first thing, they say Square recently reported low profits. No, they didn't. That's just not true. According to Square's earnings report, Bitcoin, here's where we get to the meat, Bitcoin-related business generated about 5% of overall revenue, amounting to $34.1 million. However, the amount of profit from Bitcoin barely covered the funds spent to acquire it in the first place. Profits total around $200,000 or 0.6% of the $33.9 million spent. Well, I don't know what they're taking this out of context, I believe. So 0.6%, that's their fee that they charge to process the transaction. So even if 95% of their money was, say, dollars or whatever the fiat that they're
Hmm.
using, and so they're only getting, I don't know, multiply that by 20, I guess that would be your 95, or 19, that would be your 95%. It's a pretty large number, but then multiply that by 0.6, and that's their total earnings. So their profits, that's neither here nor there. They're just getting into this and setting up the whole system to do this sort of business with crypto probably has a bit of a cost to it, and there's a bit of a maintenance cost to it as well. But they're also not having to pay Visa and MasterCard their share. So I think the profits for the Bitcoin have to be higher than the profits for Visa MasterCard payments. So that's number one. So whatever they're earning in Bitcoin, they're going to be making more money off of it than they are if they're dealing with Visa MasterCard payments. So that's first and foremost. Secondly, if Bitcoin related business generated 5% of overall revenue, that's huge. 5%. I was shocked when I saw that. I thought, oh, okay, well maybe they've got half of 1% or something, because not many people are using Bitcoin yet. It's pretty small, right? 5%. That's gigantic. That's enormous for just starting to use accept Bitcoin as a payment option. I mean, I'm just flabbergasted. And here they are in this article saying that these are low profits. This is Cointelegraph.com, folks. I mean, I don't understand how they could even publish an article like that unless they're actually anti-cryptocurrency, because this is like deliberately talking down the efficacy of cryptocurrency and the acceptance of cryptocurrency by people at large. This is deliberately talking it down, which is completely untrue. Completely I don't like to swear, folks, but I want to swear at this author and the Cointelegraph. They're acting like propagandists here for the bankers. I just can't believe it. I mean, this is amazing news, folks. I mean, 5% of overall revenue as Bitcoin related business. That's amazing. That is amazing.
Mm-hmm.
I'm just in shock. Anyway,
Yeah.
so that's what I have to say about that.
Yeah, I think it's pretty interesting that they've already got 5% in the most recent quarter, and they just had it out for less than 6 months. So, they had some
Yeah,
for it last year, and started the option in November, and already it's 5%.
yeah.
So,
I mean,
even if
this
it didn't
article,
rise, that's still significant, I think.
yeah, this article isn't like saying that it was a low profit or losses. That they're not getting that information from uh, or those ideas that it's low or whatever from Square itself. Square says losses on Bitcoin, this is a quote, for the 3 months ended March 31st were insignificant. I mean, and later on they're quoted, well, not quoted, but paraphrased here. Uh, in February, CEO of Square, Jack Dorsey, claimed that Square will go further with Bitcoin than the app buy-sell option, stating that Bitcoin is transformational technology for an industry that should be explored as quickly as possible. Square is quite bullish on Bitcoin. They're quite happy with what's going on, and this article is basically a bankster hit piece. I can't believe it. Anyway, I can't believe that it's on Cointelegraph. I could see this being on Bloomberg or something, but not on Cointelegraph. I mean, it boggles my mind. All right, let's move on. It's gonna ramble on too much today. So our next
Easy
news
now,
article.
easy now.
Yeah. Italy, law firm files bankruptcy petition against hacked crypto exchange BitGrail.
Now you
So,
may need to keep me under control
yeah,
on this one. Yeah, this one strikes home.
Bonelli Erede, the Italian law firm representing victims of the BitGrail crypto exchange hack, has filed a petition with an Italian court to declare the exchange bankrupt under Article 6 of Italian bankruptcy law. A Bonelli Erede representative announced on Reddit Friday, April 27th. The move represents the latest development in a war of words and lawyers that has exploded between BitGrail's owner Francesco, the bomber Ferrano, and the Nano Foundation. Since the exchange reported the loss of 17 million Nano XRB tokens worth around 187 million at the time it was reported, and 124 million at press time. In an interview with Cointelegraph, Ferrano, the bomber, claimed that theft dates to January 19th, but it was first reported February 8, 2018. According to a Medium post published by the BitGrail Victims Group, Bonelli Erade is filing the bankruptcy petition on behalf of a BitGrail creditor, Espen Enger, with whom over 3,000 claimants have so far allegedly made contact. Most victims have reportedly told Enger that they, quote, prefer an immediate accounting of BitGrail's assets in bankruptcy, fearing further depletion of their assets. Quote, in filing for a declaration of bankruptcy, a decision has been made to trust the Italian legal system to resolve the conflict. We're confident that the Italian authorities are best equipped to require Mr. Ferrano to disclose the facts of what occurred. We seek an equitable distribution of the assets rather than to permit private resolutions in which some victims might profit over others. So I'm not going to get further into this. Have a look if you're interested in what's going on here. There's been a lot of back and forth here. We're covering this because both Mike and I have an interest in Nano Financial. We've both invested in it, or hold some. I'm not sure if you call it.
I don't know if I hold any anymore.
Yeah, you might not.
Mine were on BitGrail. I don't know if I have any anymore. It wasn't a significant investment, compared to my total and whatnot, due to wise diversification and whatnot. So I didn't really have a major position in relation to my total. But still, I hate having, write off to zeros. But that is part of the crypto sphere and stuff. And projects may occasionally go kaput. Well, in this case, it wasn't necessarily the project. The nanos are still there, and while the nano project seems to still have, a lot of valid, valid benefits going for it. The fact that the nanos or the Rye blocks at the time I got it, they were Rye blocks or Ray blocks or however you want to say it. BitGrail was pretty much the only place I could get them. And had I been able to move them to my preferred exchange, I would have done that, but I didn't have that ability. So they sat there and apparently sat there too long. And unfortunately, bad
Sorry,
stuff happened.
should be
Bad
laughing.
stuff happened. Well, when it's all said and done, the amount I lost on that is nothing compared to previous losses that we're both
Yeah,
aware of what happened
yeah.
before by,
It's sad for the whole
schemers.
community, though. Really,
Yeah, it's
it's
bad
been
when an exchange
it's
goes down. It happened and with Mount Gox back in the day, and it tailspinned the whole crypto when Mount Gox went down due to
yeah,
shenanigans. So anytime shenanigans happen, hopefully the exchanges as a whole and the customers in general will hold their exchanges to hold them to higher standards, and the exchanges will be run ethically. And all I got to say is if the bomber Ferrano is culpable in any way, shape, or form, people need to be made examples of. And I'll let the courts decide it. It's well beyond my pay grade, so to speak. And as far as for my investment, I've lost more on other stuff. So it's, hey, it's a learning experience for me. But,
Well, we'll see
I
what
just,
happens. It looks like whatever they have remaining in their accounts is going to go under the jurisdiction of the court, and I reckon when it's said and done, they'll have to open their doors up again just to allow people to take their equitable share of what remains back out. I know, though, that took quite a long time with regard to Mt. Gox. It's only recently that I think claimants have been able to get their funds back. Of course, Bitcoin skyrocketed in
yeah,
the intermediate point of time, and they actually recovered all their funds in terms of fiat value, but not
well,
in
yeah.
terms of Bitcoin value.
Even
Um,
if you had 1% of the Mount Gox during its explosion, it was 200 and some probably when Mount Gox exploded, and probably up to the in excess of 10,000 by the time it stopped, or by the time they were able to get access. So even if you only got 1 in 10, you would still have a significant chunk of money, I would
yeah,
think, as far as for Mount Gox. But I never traded with them, so never had to worry about it. They were who I looked at
yeah,
though for the prices back in the day when Bitcoin did its first great big giant run up from $30 up to 1,200. Of course, shenanigans
yeah.
caused most of that, but that's water well under the bridge. Next article.
Yep, Japanese regulators discussed restricting trade of privacy-focused altcoins, report says. So, Japanese regulators suggested preventing cryptocurrency exchanges from trading anonymity-oriented altcoins Dash and Monero this month, Forbes reported today, April 30th. Relating the outcome of a working group meeting of industry experts in the country's regulator, the Financial Services Authority, the publication quotes one member of the group raising the idea of preventative measures regarding the altcoins, which are known for their focus on privacy and user anonymity.
They're just upset because they can't
Industry
tax
experts.
anybody
So
on them.
yes, well that's it. I mean that's a big part of it. It's also, the banks worrying that they're getting cut out of everything, and
As they should be. But
yep.
at least that's my point of view, as they should be. It's not,
But yeah,
banking
this
is
is
necessary, banks are not. So,
anonymity coins are really the future, and I think we're going to see more of this sort of thing coming about as crypto in general is adopted because they see that that's the writing on the wall. But at the same time, they're going to resist at every point any innovation that leads to more freedom and privacy for the individual, because that's not what government wants.
they want to
That
be
is
able to
not part of their agenda.
keep the fingers in the pies and keep the people under their control. And if they have their own money supply, then their control is gone. It's
Yeah,
gone wholesale at that point. So
right out the window.
yep. So we'll have to keep an eye on that, see if that
Yeah,
comes to pass.
we will definitely keep our eye on what's going on there. I think that one of the exchanges, CoinCheck, has already delisted these. So We'll see. They've been under the scrutiny of the regulators for some time due to a hack that they had a few months ago. All right, our next article. Berkeley City Council moves ahead with pilot program for issuing city bonds on the blockchain. The city of Berkeley, California has moved forward with an initiative to apply blockchain technology to public financing to raise funds for community projects. Last night, the Berkeley City Council unanimously voted to ask the city manager to consider a pilot program that proposes selling municipal bonds using blockchain technology. The project, initiated by Vice Mayor Ben Bartlett, aims to introduce another funding method to the city financial infrastructure that would ostensibly increase community investment by reducing the minimum bond price. Bartlett said the pilot venture intends to launch microbonds, which would allow the issuance of bonds in denominations in the range of $10 to $25. The typical minimum denomination for a municipal bond is $5,000. According to Bartlett, people can more easily afford $10,000 than $5,000 for a bond. Really? Yes. Which would make investing in city projects a more viable option for average citizens. I think that's really awesome. I'm not a government guy at all, but when it comes to government, I think local city governments are probably viable because they're close to the people and people can have a say. Now, what this really does, in my view, is it allows the average person to actually be involved, to take some ownership over their government. Because when you are a bondholder, when you are an investor in your local government, you're going to have a lot more incentive to actually be involved in your local government. And I think this is really fabulous, awesome news because it's a big win for people overall to get involved and to be involved in their government and actually promote positive change. When it's only the rich people owning the government, owning the debts of the government, then it's only the rich people who are going to be lobbying the government, and the poor people are going to be cut out of the equation. This is opening the door for people to be really a lot more involved, and I think that's really great for change in society. And this is a pilot program. Berkeley is a very kind of left-wing sort of area, but in any case, I mean, I think this is great news. And if they get this technology developed, we could see this being adopted and picked up by a lot of municipalities around the world. Really, I mean, this could be a prototype for technology that could be used in a lot of places. Because it's Berkeley, it will get a lot more attention shown upon it, and this technology will hopefully get more attention and attract other municipalities to do the same. It's not merely about raising more money, in my opinion. This is really about bringing the average person much more into the political game in their local community and get them involved with what's really going on. And that to me will have a big impact on society, a huge impact. So I'm very excited about this.
Could be pretty interesting.
Yeah. All right, our last news article for the week: South Korean central bank, crypto and blockchain to provide cash-free society. Wow. South Korea's central bank, the Bank of Korea, has recently announced it is considering cryptocurrencies and blockchain applications for its project for a cashless society. The South Korean government has been trying to get rid of coins for a long time. Many methods have been suggested, but it wants to go with cryptocurrency. According to Token Post, the BOK, Bank of Korea, announced the official launch of its cash-free society pilot in its 2017 payment report yesterday. The report mentioned that the bank has started exploring possible uses of blockchain and cryptocurrency, such as applying blockchains and passwords to payments. The bank has also established an organization for researching digital currency and analyzing the possible effects of cryptographic money on the overall financial system. Major goals of the project are customer convenience and reducing the cost of producing physical currency. In 2016, South Korea reportedly spent KRW, I guess that's the Korean currency, 53.7 billion, which is 47 million USD, on issuing physical currency. Government also plans to use the initiative as a means by which to open the underground economy, which is mostly cash-driven. So, this has been the great dream of bankers around the world for a long time, and governments in general, to get people off cash, where they can have full control of electronic money, which is stored in their banks, uh, and not floating out where they don't actually have control of it. If they have it in their banking system, then, well, in a normal bank, you have fractional reserve banking. So the more you have listed in your reserves, the more you can lend out, the more profits you can make. It's a big con in my view. So this is a step in that direction. They're going to use blockchain to basically store, I guess, or to track how the money flows. But basically, it's all electronic money and would be stored in different banks, but using a blockchain to store the transaction information, much like Bitcoin does, I presume. So it allows them to fully track it and to keep it in the bank. So it's a win-win for government and banks. I think we're going to see this going in a lot of countries. I think they're going to be adopting the same thing. The only benefit I think we could see here is that if it's blockchain money, and hypothetically, hopefully it would be allowed to trade on other exchanges, on other normal exchanges that we use now, and that means we don't actually have to keep the bulk of our funds in whatever fiat cryptocurrency that is created, meaning that they can create all these they want. I'm still going to keep my money as Ethereum or EOS or SafeCoin, and I'm not going to have to touch their money unless I just want to convert to buy something that is in a government regulated market where they require their fiat crypto to be used. I don't know. What do you think about this, Mike?
Well, for me, I don't have any problem with a completely cashless society. If it is being run by crypto, then I have 3 requirements, and it has to have all 3 requirements, every single one. The 3 requirements are decentralized. That's the first one. Open source is the second, and anonymous is the third. It has to have all 3 of those. If it doesn't have all 3 of those, if the government goes and creates a digital dollar, a digital Korean won, a digital Japanese yen, a digital Chinese renminbi, digital pounds, digital euros, if they go and create a cryptocurrency, after the adoption rate of cryptos is, hits the hockey stick in the adoption. Once that happens, the question is do the people have the awareness to go and demand those 3 factors to be part of their crypto that they are using for transactions? Now, the government can go and squeeze, the likes of which most people are profoundly shocked at how much squeeze they can go and squeeze on somebody. And if the people just flat out stop using it and start using something different because of how egregious the implementation of the crypto cashless society is. I mean, in India, when they went and pulled the top monetary amounts out of the fiat currencies, that of the rupee notes and stuff, once they pulled those out, the people they were a highly cash oriented society to start with, but it's a question of, well, how are they going to do commerce? That may be something that is, a cashless society might work for a first world nation with a fairly advanced technology grid, solid internet around, and most people have debit cards or credit cards or something else similar. But when you're talking about nations where the technology isn't the same, what is termed second or third world countries, where cash is used more often than a credit card or a debit card, when that happens, they're not going to be able to go and have a cashless society in a third world country unless they just flat out, okay, we're going to abandon this country, let them fend for themselves until they get their technology together and get caught up. Now, they may go and do huge World Bank funded infrastructure upgrades and indebted, get that country indebted for eternity, because of the way that the World Bank does their loans and stuff. You might as well be talking with loan sharks at that point. You get a better deal from them than you would from some of the bankers and whatnot. But when it's all said and done, the cryptos, I keep saying it's transformative technology, and somewhere down the road, there will be a reckoning between crypto and fiat. And I don't see the governments
Yeah.
of the world fighting this. I see them adopting it. And the critical point is when you go and look at when the governments create their own crypto, do they demand its use? Or do the people have a choice in the matter?
I
And
think that
I have
no
a
matter what
feeling,
they do,
yeah,
it's just going to keep. It's just the harder you squeeze, people can take a lot of pressure, much more than I ever suspected when I was
yeah,
younger. But the harder you squeeze, eventually, they're just going to go through the fingers, and they're going to find ways around it. And they start implementing things like this. Fine. I mean, I don't think it's going to ultimately work out the way they hope. You know,
yeah,
I think it's just slowing down the inevitable, which is we're going to move toward a really strong anonymous cryptocurrency where you control your money and you control your investments, and these middlemen are just going to be squeezed out. They're trying to lock all the doors and shut all the gates so you can't escape. But basically, we're all looking out at the real world out there and going, we don't want to be in this little pen anymore. We're tired of it, and we're gonna find a way out. And the more they try to keep us in, the more people are gonna be looking out, trying to get out. So I don't think these kind of attempts are going to work in the long run. If they were smart, they wouldn't worry about it. They would just focus on actually opening up and actually providing more anonymity and more of the cash, and being more responsible with their money printing. But I don't think the people who are running these governments are really very strong-willed enough to or smart enough even to make that happen. I think they're too corrupt, and they're gonna destroy their own system, and so be it. I'll be happy when that goes down.
mhm.
All right, let's get into the last item, the MaidSafe update for the week. So I'll just go through the highlights. There's a lot happening in the update this week. I recommend, if you're interested in what's in the highlights, please go to the link and have a look. So much happening now over at MaidSafe, and it's just amazing. Things are really going on over there. So one, the individual Safe DevCon videos have now been published on the YouTube channel. You can check these out. The Safe DevCon 2018 playlist. And folks, the links here are on the MaidSafe Dev Update forum post, and that link to that post is in the show notes here. So if you'll find them, a link to the show notes below the video somewhere. Number two, community member Cooperka posted an article that is going down very well on Medium titled MaidSafe's Safe Network in 90 Seconds. I've had a look at the article. It's very quick, explains basically what MaidSafe Network is about, and give you a quick overview if you're a newbie. Please have a look if you're new to listening to us here in the Safe Crypto Show, or newbie to MaidSafe. Please go look at that article. That'll give you a quick rundown of what's going on. Doug Campbell was a guest on Fergish's Safe Crossroads podcast, where he discussed the highlights of Safe DevCon 2018. I've yet to watch that. I'm going to be watching that today. Please check out Fergish's podcast. It's really awesome, and I highly recommend it. It's got good audio, and you always find out interesting things over there on Safe Crossroads podcast. Number four, MaidSafe is going to design and develop a new Safe Network website in-house. So they basically have decided not to go with doing that outside. They had initially hired a website developer company to do that, but they've decided they've got enough in-house expertise now, and they're gonna do it themselves. Next, the front-end team is working on adding support for multi-part range requests in the Peruse browser. Let's see, 1, 2, 3, 4, 5, 6. Number 6, as explained during DEF CON 2018, we are relicensing the APIs and language bindings to MIT and BSD licenses. We're also removing the commercial license on our core libraries. They are now GPL version 3 only, and we're getting rid of our contributor agreement. Number 7, with help from Lionel and the mobile dev team, the Safe Client Libs library team were able to fix the known bugs in the Java and C# bindings. So that's great news. Next week, they'll be covering more test cases, and if there are no more known bugs, we'll announce the public availability of the Java and C# language support. That's awesome. That's great news. And lastly, the routing team is currently following 2 parallel promising leads to solve the issue of eventual consistency in the network in a robust way. This is in addition to our existing approach, which is being integrated into routing by one of the teams now. This is exciting as more and more timers are being replaced as the algorithms in routing become much more asynchronous and natural. We're hoping that we can remove swaths of complex code very soon, and that will be a great step and one that reduces the requirement for so many test nets as we previously mentioned. So fewer test nets means we can get through the alphas faster and get to betas faster, and so that is really, really awesome news, folks. Okay, so that's all the highlights. Again, there's a lot of detail in this update. I recommend people to have a look through it and read through it if they have any interest. Lastly, I want to play the Heaven and video that they released, I think, during the DevCon. Let's just see. That was published on April 24th. It's a 1 minute 50-second video, so I'm just going to play it real quick. It's quite interesting.
The internet has made the world a better place. Or has it? Today's internet user spends most of their time and money on a small handful of websites, giving enormous power to a few corporations. These companies make billions by centralizing and aggregating our personal data and selling access to advertisers. Decentralization promises to create a safer and fairer internet. But if that promise is ever to be realized, it should reward everyone that contributes to the data economy. Introducing SafeCoin. It's not just another cryptocurrency. In fact, it doesn't even use a blockchain. SafeCoin is the incentive mechanism behind the Safe Network, a powerful system for keeping personal data and identity private and secure. SafeCoin allows anyone with a computer to be rewarded by providing unused resource to the network. Developers on the network also get paid in SafeCoin according to how much their app is used. All payments on the network are handled automatically by the system without any human interaction to ensure equality and fairness. SafeCoin transactions are not viewable on a public ledger, and only the previous and current owners are known by the system. Transactions are confirmed instantly with no transaction fees, while multi-layered encryption provides additional security. Instead of paying a giant corporation for storage on a centralized server that can be hacked and censored, users of the Safe Network can rest easy knowing their data and identity are secure, while contributing more fairly to a worldwide community. SafeCoin will become the world's currency for security and privacy. Join our community today.
So there we have it. Oop, started to play again. So that's their most recent video. I think they've got another one that'll be coming out soon as well. So really awesome things happening over at MAIDSAFE. Please get involved if you have any interest in a real, free, decentralized, autonomous, anonymous network that can save us all. I mean, if that's not you, then I don't know why you're listening to this show, frankly. But that's not you. You're probably working for a government somewhere. All right, folks. So that's all we have. That's all we have for today and this week. I'd like to thank both our viewers and my co-host for joining me today. We hope you found the episode informative and helpful. Please subscribe, like, comment, and share our video with others. And tune in next week for another interesting episode.
We will catch you then.
Yep. Take care.